Hello, everyone. My guest today is Ryan Austin. He's an entrepreneur who has spent over 10 years driving improvements in learning and development. In his current role as CEO of Synapse, Ryan is focused on developing innovative products to help learning teams increase productivity and create impactful training at scale. Before this company, he served as Senior Vice President for World Trade Group, an organization that offers live events, online products, and training courses. Ryan, you ready to take us to the top?
Sure.
All right. So just to be clear, the URL is getsynapse.com. Is it a SaaS company or are you selling services too?
No, this is a pure SaaS company, 100% software, no service.
Okay. And your baby, you're the founder?
Yep, one of the co-founders.
When did you launch?
We launched it, I guess, officially in 2017, although we worked on the R&D for about a year and a half before that.
Mm-hmm. So launch 2017. I mean, how much did you spend sort of on the R&D and the MVP before your first paying customer? Do you remember?
Well, there was a lot of different versions. We don't have a direct competitor still in the market right now. There's indirect incumbents. So there was a lot of lessons learned and learning curves to do what we do. And we spent probably about 50 grand to get the first kind of iteration out the door and started to monetize it, but then kept going from there. Raised a little bit of money after that.
How much have you raised?
About $4 million.
Do you regret that?
Don't regret it because we have some great institutional investors, and early on we had some angel investors who, without them, we wouldn't have gotten to where we are today. Mm-hmm. One of my first SaaS companies that really have taken to a point where we're really about to scale now, which is exciting. Would I take money on early again? Yes, but you would have different limits on how you do things. You learn as you execute. So
of course. So signed your first customers up in 2017, I imagine. How many customers are you serving today?
We have about 60 on the platform, 60 enterprises directly today, and but we've just started to experiment with some channel partnerships. One which we just did a press release on, where over the next 2 years, they're going to onboard us to 11,000 clients of theirs, which is exciting.
What did they get for that?
It's just similar to how you would do kind of a wholesale retail relationship in a traditional product. It's similar to that. So revenue split.
So what percent of the revenue do they get to keep? Like 30%, 50% more?
I can't talk about that specifically just because we have certain agreements in place, but it's a win-win scenario where we're both happy. It's a very balanced relationship.
Can you share a range? Is it more or less than 50%?
It's around that. Yeah.
Okay. Around that. Fair enough. Let's go back to your first 10 customers. How'd you get them?
Oh, being scrappy. Our first client ever was a Fortune 10 customer who basically...
Who was it? Which company?
ExxonMobil.
Okay.
And they basically read about us in the newspaper after coming out of an accelerator, and asked to see the software. We were like, well, we don't have software yet. Here's our plan. And it was a problem for them that they said, well, we'll give you a little money to help you develop this. And that was really when we flipped the switch to just really focusing on software as a service.
How much did they invest?
It was in the six figures range.
Okay. And was it just like a customer payment, or did they actually get equity?
Customer payment.
Oh, great. That's the best way to do it. Very cool. So that was your first customer. You got them on board. Are they still paying today?
Yeah, they are.
That's great. So what is the average customer paying you per month to use Synapse?
It's interesting. We just went through an iteration of our pricing model as a seed stage company. It's all about learning. Our average price was about $12,000 in the past. And
annually?
It increased annually and increase from there based off a per seat model. But we actually just flipped the switch with COVID to not having any minimums and pricing at $1,500 a seat to lower all barriers. And we're seeing contracts come through at greater deal value than before.
And so can I take 60 customers times $1,000 a month on average? I mean, you're doing about $60,000 a month right now in revenue.
No, it's higher than that, actually. Some clients are paying us in the six-figure range.
Okay. Can you give me like a range of where you're at? Are you north of $100,000 a month?
So we're, I guess I'll say it like this, just because it changes daily right now, Nathan, especially with the partnerships we just onboarded. We have not yet gone to Series A. And when we do, our plan is to start working with Series A partners at around 2.5 million ARR. So we're not quite there yet, but we'll be there in about a year's time or less.
I mean, do you think you can break $1 million run rate by the end of this year? 3 months left?
Oh yeah, for sure.
Okay, got it. So your plan is to break $1 million this year, then double the next 12 months, and then go do a Series A.
Yeah, I mean, we'll have over 100% growth this year.
Okay, got it. So if you're doing like, call it $70,000, $80,000 a month right now in revenue, what were you doing a year ago?
Well, 100% less than that.
Yeah. So what was the number?
So we were at a little over 400K in ARR less than a year ago.
Yep. Yeah, it's great growth. Where's most of that growth come from? Expanding customers who are already with you or getting new customers altogether?
Both. So we have a transactional side to the business, just like any other SaaS company. And we call that internally kind of the growth model. And with the partnership side of things, we call that the scale model, where we partner with learning management systems that focus on specific industry verticals. And that way we can service their clients with our technology, and they don't have to build what we offer.
What do you mean by transactional side of the business?
So transactional meaning, we have a BDR and a account executive team who focuses on net new clients. We find them through inbound and through demand generation and outbound methods. And then the scale side of the business is just through the partner network.
I see. How many quota carrying reps are currently on the team?
We just hired our second AE as of last week.
Got it. And your AEs are the only ones with quota, BDRs don't?
Yeah. BDRs are incentivized on sales accepted leads or sales qualified leads. So,
and how many engineers are on the team?
About 9 right now.
Okay. And what's the total team size?
Little over 20.
Okay, nice. Good stuff, Ryan. It's very cool. So driving growth, it sounds like channel partnerships is going to be a key strategy for you guys moving forward to drive growth. You've raised $4 million currently. Are you still investing that capital to the point where you're cash flow negative each month, or are you break even now or positive?
There's a little bit of a loss still, but we have a lot of runway with the money we've taken on as well.
When you say a little bit of loss, you're talking like 10 grand a month in net burn, or 100 grand or more?
No, we're nowhere close to 100 grand in net burn, but
okay, got it.
Yeah,
got it. But more than 10.
Yeah.
Okay, fair enough. When you took, you mentioned a lot of cash that you raised is still in the bank. When was that last raise? How long ago was it?
Well, we raised the majority of the money back in 2019, and we started experimenting with partners, and very recently brought on 3. So the experiment ended up not being an experiment, and we didn't want to take the money that we secured from the initial seed round and fuel it into partnerships because it wasn't part of the plan. So we just took on another $1 million in August.
Mm-hmm. Okay, got it. Okay, so literally just recently you took on 1.5. You also chose to do, back when you did the round in April, I think it was, of 2019 from Generation, I think you did 2.5. In between that, in the 1.5 you just took in equity, it looks like you also did a little bit of debt. Is that accurate? And if so, help me understand how to use debt in a SaaS company.
Yeah, so the debt was really interesting, actually. So we brought on some venture debt through Comerica Bank, and it was mainly to really build the relationship early, so that when we do our Series A, we can take about 30% of venture debt on top of that next round. So this was just to get our feet wet, build credibility, build credit with the bank, and so that we can use it as a non as a future investment part or a future financial partner without taking on without giving away equity in the next round. So for this round, we're not really leveraging the debt right now, although we have access to it. We do plan to leverage it closer to the time that we pull the trigger on our Series A, so we can start scaling the company and hiring.
Well, hold on, Ryan. Those two things. The strategic reason you told me you took the debt is opposite of what you just told me what you're actually doing with it. You told me strategically you want to build history, but you just told me functionally you haven't actually drawn any down, and you don't plan to until the Series A. Having a line but not using it doesn't build credit history with Comerica.
6 months before our Series A, we'll draw it down.
There's a lot of firms looking at SaaS companies looking at debt like this. Silicon Valley Bank sort of will do things like this in the 5 to 6% interest range. It's sort of a warehouse line or a term loan. Can you help me understand sort of the structure you put on your $500,000?
Yeah, well, it was an unsecured line of credit, and we were given favorable terms because of some of the investors that came into last round and who Comerica had a relationship with.
Mm-hmm. When you say favorable terms, are we talking what was the interest rate on the line? Are you talking like 5 or 6% or something higher?
It's less than that.
Okay, less than 5 to 6%. Got it. And usually banks like this do require warrants, so there's still a little equity kicker.
And no warrants.
Okay, no warrants. And so, and no nasty covenants, origination fees, anything like that.
No. So the way they protected themselves is it's not an open line. We have to use it by a certain date, otherwise they can claw it back. And so it's really based off of the cash out dates and things like that. So they de-risk it that way. But we're executing so closely to our model right now that we'll be able to leverage the cash versus not being able to leverage it. We actually did an extension on it because we were off a little bit of our plan the first time around. So we had to go back to them and ask them to extend it. So that. What
do you mean? I thought you said you haven't drawn it down yet.
No, but the term of the line of credit would have expired if we didn't use it.
I see. So you asked them to give you more time.
More time. Yeah.
Yeah, I see. And so why not just use that line? You took a bunch of extra dilution, raising $1.5 million in addition to the $500K from equity investors. Why do any equity at all?
I think the equity partners who have taken on is smart capital. So outside of participating this round, these weren't spray and pray funds. They were
this is BDC, Venture Capital, Generation Ventures, Ripple Ventures, and Differential Ventures.
Yeah, so they most of them have large funds, and the other ones are very CEO friendly and entrepreneur friendly. They want to back you. It's not a spray and pray seed fund. With the VCs who we put together, they're already looking to commit about a little over $5 million going into the next round combined.
How much do you think you'll raise in your Series A, or what are you targeting?
About 10 to 12.
And what valuation would you love to get? Obviously, you have to negotiate this, but what would you like to get?
Yeah, it's up in the air right now. I've seen Series A companies in our space as low as 25 pre-money and all the way up to 40 million pre-money. So somewhere in between there. I don't want to shoot myself in the foot without actually realizing the value creation that we know we can create. So
yeah,
somewhere
Yeah, I mean,
along
right now
that.
you're at $1 million in terms of run rate. Obviously, getting a 25 million, pre right now, and then raising 10 or 12. I mean, that would be pretty incredible at $1 million run rate and growing. Even though you are growing 100% year over year. Now, if you get to 2.2 million and grow 100% year over year 2 years in a row, it makes more sense.
Yeah, it's really interesting. So there's some things we're doing this year with IP around some of the analytic features that we're rolling out shortly, as well as investing a lot into product-led growth. Being a productivity software, the trends are really interesting when you look up Crunchbase with companies like Asana or Monday.com or Jira on how long it took them to kind of get to their Series A. It's a similar trend to what we've experienced, but then they start seeing like crazy growth after that, right? So we're seeing a lot of the similar trends, and our productivity software just focuses on learning and development departments. It's built specifically for them, not for every single department. So our integrations are with learning management systems, authoring tools, similar to how Jira is purpose-built for engineering teams. So it's a very esoteric problem, but big market and exciting opportunity.
Ryan, we're running out of time here. Quick answers if you can. Gross revenue churn monthly is about what?
Can you repeat that?
Gross revenue churn. Churn is critical in a SaaS company. What's your gross revenue churn look like?
We're retaining about 89% of clients right now.
On an annual basis?
Yeah.
Okay, so 11% gross revenue churn. And then I assume you have probably some good expansion revenue, right?
Just getting into expansion now, really.
Okay, got it. So net retention is something like 90-95% annually currently.
Yeah.
Okay. And do you have like a model for customer acquisition, like nailed down? You're testing the channel partners, but I mean, what will it cost you on average in terms of CAC to get a new customer paying $12,000 a year?
Yeah, we think that payback will be 5 to 6 months once we roll out the product-led growth strategy.
Okay, but what is it currently?
It's higher, which is why we raised some money. It's about $10,000.
Okay, got it. $10,000 to get sort of $11,000 or $12,000 a year customer. So payback's more like 12 months.
Yeah.
Okay, interesting. Very good. I mean, look, super interesting space. You saw ClickUp just raise a pretty large round, going from nothing to $35 million raised. Monday's obviously in this space. Curious to see how many big winners we can have in this space, but we'll be rooting for you.
Yeah, thank you.
All right, let's wrap up with the famous five. Number one, favorite business book?
Tell to Win.
Number two, that's one that very few people know about. I love that you know that. Tell to Win is a really good one. Number two, is there a CEO you're following or studying?
Not any that anybody would really know. I've had a lot of great mentors. One, Jay Steinfeld, who was the owner of Blinds.com, who sold to the Home Depot. He was very instrumental in helping us.
Number three, what's your favorite online tool for building your company besides your own?
Outreach.
Number four, how many hours of sleep do you get every night?
5.
And situation, married, single, kids?
Married with a dog.
Okay, fair enough. And how old are you?
I'm 37.
37. Last question, Ryan. What's something you wish you knew when you were 20?
To listen to people.
Guys, get Synapse.com. They've scaled from, call it $400,000 a year in revenue in 2019 to over $900,000 in terms of annual run rate today. 60 customers pay on average $12,000 per year. They're burning a little bit of capital, way less than $100,000 per month, but more than, call it $10,000 a month. They raised $4 million to build the product, 20 people on the team, 9 engineers, small sales team. They're growing right now, 2 people on it currently, about 95% net revenue retention as they look to scale in a very competitive productivity tool space, but they are hyper focusing on learning and development teams. Ryan, thanks for taking us to the top.
Thanks, Nathan.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.